the book talks a lot about Roth conversions because we really believe in them. If you have the wherewithal to do it, why would you pay more taxes than you need to?
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, helping us to be more informed about the things that we need to know about our money in order to achieve your important financial goals, ladies and gentlemen. And of course, keeping up to date with all of the changes in the world around us, Tim, and in the laws that might affect our money and our finance and our investments. The big news right now continues to be the passage of the one big beautiful bill, the extension and permanency of the 2017 Tax Cuts and Jobs Act, with some additions. So we're going to keep talking about this one big beautiful bill, what it means, what it does, what it doesn't do, how permanent is it really, and how savers and investors need to think proactively about the opportunities that it might present to us. So again, Tim, always a pleasure. Welcome back. We appreciate your time. What have you been up to over the last week?
Well, Peter, just trying to digest this bill. I mean, I think there's a lot of, as my dad used to say, sizzle, no steak in it. I like that it made things permanent, but as we've talked about on other shows, the permanency is up to, you know, uh, the other party not wanting it and then, repealing it. And with that comes a problem, right? So it's not that permanent. So one of the things we're really harping on with our clients is to, make sure we're filling up that 12% tax bracket if they want to do some Roth conversions. Ed Slott, who's all over PBS and that type of thing, always talks about, never leave a 12% tax bracket unfilled.
Mhm.
And with the $6,000 credit that some seniors might be receiving, with uh, their tax bracket, that's another opportunity too. So we're talking to people still about Roth conversions, and I'm finding that there's a lot of firms out there that will not have that conversation. They don't want to touch it with a 10-foot pole, and they just say, "Oh, we'll talk to your CPA." Well, we have a CPA here, so we can come in-house, do the analysis if it makes sense or doesn't make sense.
That has always seemed to be an issue in my mind in the financial world, Tim, is like this separation between investment and tax. And I understand that not all financial advisors and financial professionals and CFPs are tax preparers. That is a different designation, different
I agree.
credentials, a different license. They don't prepare the taxes. They're not CPAs.
Right.
However, when financial recommendations are made, they tend to have tax consequences that I feel like anyone making the recommendation should at least have an understanding of what the end results are going to be. And then looking down the road, maybe crafting those recommendations in such a way that it alleviates some taxes into the future rather than creates them.
Right. And the big thing that we have tried to talk to people about is, understanding what the tax bill means and then putting it into work. And, by having a CPA, it's one, that's half the reason I became uh, a CFP, a certified financial planning practitioner, is because I knew when I just did mutual funds, stocks, and bonds, I didn't see the full landscape. So I am smart enough to know that having a CPA to help us make these decisions and look at the numbers and make sure that they work and that everyone's going in with their eyes open is, the timing's impeccable right now.
Well, you mentioned Ed Slott, and he has been dubbed by the Wall Street Journal and PBS as America's leading IRA expert, and how
Yep.
his recommendation is to fill up your tax bracket. And because of the additional deduction that seniors are now going to start receiving, $6,000 per individual, that will ultimately lead to more room in any person's bracket, right, Tim? So I guess there could be people out there saying, well, is $6,000 really going to make that sizable a dent? But retirement can be very long, and if we looked back to our late 20s or mid 30s, like that range, would we tell ourselves not to save an extra $6,000 a year and invest that if we had that opportunity at that point in time? Like, look what it would have amounted to over time. So I think we should be pretty aggressive about looking at this additional deduction as the opportunity that it is.
And that being said, one of the things that we always offer to people on here is to go on our website, www.mvpcfp.com, and you can look at what your tax bill is currently if you default to the IRS's plan for you, and then we can look at what it would be subjective to if we did a Roth today. So, and when people see that as an eye opener, and that creates the want and the need to do a Roth conversion, because why would you want to pay more taxes? Regardless of party affiliation, I don't, when I go to a restaurant, I don't say I'd like to pay more than the next guy. That makes no sense, right? So I want to pay, if I have a coupon, which is what I think a Roth is almost, to take off of my taxes down the road, why would I not do this?
Yeah. And in many cases, Tim, that online retirement tax bill calculators showing people the opportunity to save in some cases several hundreds of thousands of dollars in taxes over the course of their lifetime. And of course, that's relative to the size of your account balance, but a significant portion of the taxes that you would otherwise pay, which just that part of it, Tim, I think is eye-opening for people because you've mentioned on this program many times that most anyone you talk to can tell you within a slim margin of error what their retirement account balance is, but most
Yep.
people cannot tell you how much they're going to pay in taxes on that retirement account balance. That online retirement tax bill calculator at mvpcfp.com, mvpcfp.com will help people not only understand what that tax looks like, but then show them what potentially taking advantage of current rates could help them save.
Right. And going through that exercise is absolutely perfect for people. It's no harm, no foul, but you can kind of go in with your eyes open. And I find most people, I'd say 99% of people who actually go through the process of that, their eyes get really wide open. So anyway, but I mean that's one of the more important things that we're trying to work out with our clients.
Well, again, if you have questions, if you would like to take a look at that online retirement tax bill calculator, see how much you could potentially realize in tax savings, in tax reduction on your retirement account balances, pick up the phone, give Tim Stearns and TJ Stearns Inc. a call, 800-640-2256. That is 800-640-2256. Or you can go to the online retirement tax bill calculator, crunch your own numbers, see your own results at mvpcfp.com. mvpcfp.com. Tim, I believe that this one big, beautiful bill is probably going to impact almost every taxpayer, saver, investor, income earner in some way. Certainly, everybody that you talk to walking through the doors there at TJ Stearns Inc. And we've got a lot of certainty added, at least in the near term, for what we will be paying. Because at the beginning of the year, you and I were talking about how at the end of the year, we didn't know
Yeah.
what taxes would be, but they were set to increase. Now we know they are not going to increase. And for all intents and purposes, that is a permanent extension. But let's talk about how permanent that really is and what these rates now set for at least some time mean for us today as far as an opportunity?
Well, I think these are the lowest income tax rates we've seen since the early 1980s, when maybe many baby boomers were just getting into their careers. So why would we not want to take advantage of that to do some Roth conversions? I think that many people don't realize that. They think, oh my gosh, it's still a high tax bracket. No, it's actually the lowest it's been in a long time. So let's be careful here and take advantage of this.
So, in other words, Tim, you think that taxes feel painful now? Just wait and see.
Oh
like,
yeah. And
like
I've
compare
asked,
them to where they've been.
right. And when I do my tax seminars, when I do my retirement classes, when we talk on this show, I have never had anyone talk about taxes going down.
Mhm.
In my classes, everyone shakes their head affirmatively that taxes will go up at some point in their retirement. So if I have this coupon that I can use, why would I not do that?
Yeah. Uh, Tim, if I'm going to the department store and there's two racks, one is 25% off and one is full price, and the same item is on both racks, I'm not going to voluntarily pay the full price. I'm going to pick it up and look, make sure that it's still, the same item, same quality on the
Right.
25%, and I'm going to buy that one. However, I'm still a frugal shopper. My wife makes fun of me because I don't buy anything. I'll probably look at the item and say, well, I don't actually really need it. So even though it's a good price,
Sure.
I'm going to put it back, right? That's not an option with taxes. And I think that's a realization that we need to come to as well, is that they are a compulsory purchase. We must pay taxes. It is a pay me now or pay me later system and setup. So why not proactively pay them when it's got the discounted price, the sale sign on the rack, so to speak?
I agree with you, and I would also say that, income taxes were brought about because they wanted to pay for the Civil War. Well, now we have this thing called a deficit that is mounting by the second. And, with that comes, how are you going to get out of it, government? Are you going to cut taxes, and cut spending? No, they're going to keep going with their spending and they're going to increase our taxes at some point. When that happens, I don't know, but right now I know I have at least another call it 3.5 years where I can do something about my own personal taxes. It's not a if, it's a when our taxes will go up. So that is a big conversation we're having with people. And we talk about this in my book, and I think it's appropriate to give out 10 of those to the first 10 callers if they call 1-800-640-2256. That's 1-800-640-2256. If they have $1 million or more in their portfolios, we'll get that book to them. The book talks a lot about Roth conversions because we really believe in them. If you have the wherewithal to do it, why would you pay more taxes than you need to?
Again, that's 800-640-2256. Call that number to have a conversation with a CFP, certified financial planning professional, Tim Stearns, CFP, about your situation, concerns or questions you have about your finances, your investments, your brokerage, your retirement accounts, your retirement planning, or one of the first 10 callers as well. I shouldn't say or, as well, you can get your Protect and Grow written retirement blueprint put together, as well as a copy of the book Solving the Modern Retirement Riddle. So it's a great opportunity, ladies and gentlemen, and an offer at no cost. It is a courtesy service that Tim Stearns, CFP, and the team from TJ Stern extend for listeners and viewers of the show. So again, 800-640-2256, 800-640-2256. So Tim, the provisions of the one big beautiful bill, individual federal income tax rates permanently extended with inflation adjustments now starting in 2026. Really, they started in 2017. That one I think we've talked about. And by the way, all of these are retroactive to the beginning of the year. So that's a
Yep.
nice another nice thing, is that we get all of these for this tax year. We don't have to wait
Yep.
until next tax year. The standard deduction, Tim, for 2025 will increase $15,750 for individuals, $31,500 for joint filers. Cap on itemized deductions. You can only itemize and deduct 35% of your income, right? So there is a cap on that. The SALT tax, and this may be something that is of importance for Illinois residents, right, is that the state and local tax cap has been raised from $10,000 to $40,000. This is only through 2029, though, Tim. So the permanent nature of some of these things, again, some of them have some expiration dates. So if you would talk about the SALT tax and then talk about this expiration.
So it's basically the state and local taxes that we're able to write off. It used to be 10,000, now it's gone up to 40,000. And I know most people in Illinois have to be happy about that. We're the number one taxed state in the United States if you add in all the different compulsory taxes that we pay. So I really like that. And what was the other thing you said, Pete?
And then the expiration of that in 2029.
Yeah, it's not here forever. And then it reverts back down to the $10,000, which, God knows what give and take was given there. But at the end of the day, this is nice for the next 3 years, and we'll see where it goes from there.
Now, that $40,000 level, that increase, also phases out at $500,000 of income, of modified adjusted gross income, and after that point, back down to the 10,000. Alternative minimum tax permanently extends the increased individual AMT exemption amounts. To the 2018 levels, $500,000 for a single, $1 million for joint, permanently extends the increased child tax credit up to $2,200 per child now, beginning in 2025. So there are some things in here. And then, Tim, one of the ones that I know is of significant discussion and importance is this social security taxation. And I feel like what is being said is a little different than how things are in reality. So, can you talk about how seniors will now not pay tax on their social security and then how it is actually working in the bill?
Well, I don't know if you got the email that we got here, but it said back when this first came out that Social Security would not be taxed anymore. That is not the case. What they're doing is they're giving a $6,000 deduction for an individual and then $12,000 per couple. Of course, as everything with this bill, there's going to be a phase out of $75,000 in income for an individual and $150,000 for couples. And then it's eliminated completely at $175,000 for an individual and $250,000 for a couple. So my point is that a lot of the people, I think they'll enjoy this, because they don't have huge salaries or anything like that, or they're pulling too much from their IRAs. It is a nice thing, but again, it's not exactly not taxing Social Security.
Right. It's putting another line item
Yeah.
that sort of offsets the Social Security
Yep.
taxation. But as I understand this, Tim, in order to eliminate the taxation on Social Security, they would have had to have passed the bill in such a way that they didn't believe they had the numbers for. This bill passed through
Right.
reconciliation, which only requires a simple majority rather than the 60 Senate votes that's required
Right.
with the normal procedures. And because they didn't believe they would have the 60, they did it through reconciliation. They couldn't just do away with the tax on Social Security. So they added this additional offsetting, air quotes there, offsetting deduction. The thinking being that for most Americans, this extra $6,000 deduction credit will offset what they're paying on Social Security taxes. But again, Tim, not as permanent, nor not exactly not paying tax on Social Security. Again, it's a separate line item. And this provision expires in 2028 unless extended by Congress. So when they talk about something being hard to change, the saying is it will take an act of Congress to change it, right?
Right.
Aren't these expiring provisions de facto, in effect, kind of incentivizing Congress to act to change things at some point in the future?
I'd like to think that, and I guess it depends on what party's in there to see what that shakes out as. But I think the big thing here is that we always stay abreast of this type of stuff when it's coming out. When there's changes, we do a blast to all of our clients and tell them, hey, be aware this is good or this is bad for you. We're staying on top of it. I think a lot of people think it's other advisors, and when I say other people, think it's a hot potato and they don't even want to, talk about it. We're going to hit this head on with people that so that they go into it with their eyes open. So, I think it's going to cause some different havoc with people trying to understand it. But at the end of the day, it is a good thing for most of our clients. And they're made aware of that. If you haven't been made aware by your advisor, or if they're, reluctant to help you with their, shredding down your taxes, give us a call at 800-640-2256, and we'll be happy to help you with that.
Yeah. Kind of an indicator that you may need a review. If you're missing that part of the conversation, what
I
else could
agree.
you be missing? I mean, you could have fantastic returns, Tim, but if you're taxed to oblivion, what good did
Right.
it do
Right.
for you to get those higher returns? Being efficient with taxes is as effective as shooting for higher returns, but with far less risk involved
Agreed.
generally. So again, ladies and gentlemen, if you're not having these conversations, if you're being told that that is a separate conversation, can't have that, give Tim Stearns a call so you can get a better understanding about how your investments are impacted by taxation and some of the opportunities that you have to be more efficient to keep more of your money. 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, when you talked about political parties and the shifts that we see in America all the time between the two, and politicians sort of being short-sighted, I feel like this is a very example of that being the case. Like back in 2017, when the Trump Tax Cuts and Jobs Act was passed, it was only an 8-year measure. And I
Yep.
think Trump, assuming he was going to get reelected, was content leaving it at just 8 years, thinking, hey, well, I can address this again in my second term. And then that didn't happen. And so Biden, the Biden administration is in office for what Trump thought would be his second term. And Biden, also thinking there would be a second term, didn't address the 2017 Tax Cuts and Jobs Act because it was set to expire.
Yep.
And so they could just let it expire. Taxes would have gone back up, and they could say, well, we didn't do that. We didn't pass any tax legislation to raise taxes. That was actually the last guy.
Yeah.
And then, of course, Biden did not get a second term. Trump's back in there, so now he can address this 2017 bill that was going to expire. But like the short sightedness of the shoe sometimes being on the other foot, I think impacts all of us, regular everyday citizens, workers and savers. And what we have to, my takeaway from that, what we have to think about there is that we have a change in leadership every 2 years in this country.
That's
It
true.
feels like we are in a never-ending election cycle at this point in time, Tim. And the shoe at some point in time is going to be on the other foot. And with the provisions of this bill that are set to expire, again, there's an incentive that Congress is going to have to come back and, perhaps under new leadership with a different attitude about taxation, reassess these tax laws.
Well, I think they're going to have to, right? They have all these different things expiring. You have, people getting uptight about it and yelling and screaming and wanting something done. And that creates them to have to actually act like they're one of us, which I don't think many of them are. They kind of live in a fantasy land.
Yeah, it is also a system where they live under different rules than they
I
pass for
agree.
us and require us to follow, right, Tim? But with the fact that these are not so permanent, like, isn't now the time to act on certain things like Roth conversion strategies? Like,
Yes, now is the time because you know exactly what taxes are right now. So you need to act on it. And when we've been given a gift of lower taxes, we need to take advantage of it. If you're not, shame on you. And if your advisor's not telling you, shame on them. Because you need to, no one's going to look out for you. The Congress won't, the president won't, no one will. You have to look out for your own. So I would make sure that you're taking advantage of these lower tax brackets they're historically low. So now is the time, and we're making sure that our clients are knowing, hey, if you have the wherewithal, we should do some Roth conversions. If you don't, then we need to look at it down the road. But right now is a great time for that.
Tim, you've also talked about how your taxable income impacts how much you pay for health care, and
Oh
that
yeah,
your health care premiums in retirement are income related and assessed, right? IRMA, the income related monthly adjustment amount, is based on your income, how much
yes,
you end up paying for Part B and Part D of Medicare. And digging into this a little bit more behind the scenes, that's actually not part directly of the tax code. These are additional means related assessments, not a straight tax,
Right.
basically additional fees that if you look at the different trust funds that the government has, they're all underwater. Social Security, Medicare Part A,
Medicare, yeah.
but Medicare Part B and Part D, thanks in large part to the additional revenue brought in
Yep.
as a result of Irma, those are the only ones that are not underwater. So, like, do you think the government looks at this and says, hey, those extra fees, they aren't a tax. They don't require us to pass the same kind of laws, and they're working. Like, could they not take a lesson learned from that and kind of superimpose that and apply it to other areas in our lives?
Oh, I definitely think they can. So that's why it's nice to be doing Roth conversions before you turn 73 and you have these, mandatory required minimum distributions. So the earlier, the better. If you're able to do it, is what we're calling over here. And if you're interested in saving taxes, now is the time. And I would give us a call at 800-640-2256, and we can at least look at it and see what you could end up saving.
We always appreciate the time with Tim Stearns, CFP, president, founder of TJ Stearns Inc. Ladies and gentlemen, a lot of food for thought for you. And there are provisions in this one big, beautiful bill that most certainly apply to you. And you need to understand how they apply, what they could result in, and how to take advantage where you've got certain opportunities. Maybe for a limited time only, regardless of the permanent language that is being used. And so take advantage of these opportunities while you have them, and to identify them and learn how to take advantage to your best benefit. Pick up the phone and give Tim Stearns, CFP, a call, 800-640-2256, 800-640-2256, 800-640-2256. Tim does offer to put together the Protect and Grow written retirement plan for you, looking at income, investments, taxes, healthcare, and legacy, making sure that you have a documented plan that addresses all of the pillars of solid planning, as well as for the first 10 callers today, a copy of that book, Solving the Modern Retirement Riddle. So once again, the number, 800-640-2256, 800-640-2256. And remember, the online retirement tax bill calculator can be found at mvpcfp.com, mvpcfp.com. Tim, I'm sure we'll be talking more about the one big, beautiful bill and how it plays out. And
Yep.
as we dig through this immense bill, what we learn and uncover as far as savings opportunities for listeners and viewers of the show.
Sounds good to me, Peter. Thanks for having me.
Thank you, Tim.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.